Hi there, neighbor. And by neighbor, I mean my neighbors to the south. Down in the United States, it seems like while there's a lot of financial news going on, a lot of political news seems to be affecting things on Wall Street. Let's take a closer look at that, will we? Hey friends, it's Monday, and I'm Cody with Wall Street Breakdown. We're back. I hope you had yourselves a marvelous weekend. Down in the United States, we've had a little tax reform issue going on that on Saturday actually passed through the Senate, which leaves basically one more hurdle before this corporate tax cut becomes a thing of the future and the present. And it seems like the Republicans are adamantly going to push for this. We knew this was going to happen when Donald Trump first got into office. He was going to make sure that American companies employing Americans, doing work on American soil, were going to have an effective tax rate cut to help monetize American business even further. And that's exactly what we're seeing today. The Dow Jones Industrial Average closed up to another record all-time high, while the NASDAQ and the S&P 500 closed a little bit down. And that's because there's certain companies that are going to benefit from this new tax reform and some other companies that aren't going to notice really anything and are actually inside the United States going to be playing somewhat of a rigged game because they're much more international. Companies like the banks, which still, let's face it, are going to need a lot of loan inflows. They're going to need to be able to do a lot of stuff with their money still. They're going to need a rate hike for them to really benefit from this. But the banks are definitely going to benefit from this in the long run. Also, cable companies, railroads, retailers, restaurants, and any of the major industrial companies that have most of their business done inside the United States are going to be benefiting from this tax cut. What tax cut, Cody, you're saying? Well, the corporate tax rate is going to be cut. You could see cuts for some companies anywhere between 15 and 20%. That is a significant tax cut. So what is this tax cut going to do for anybody? How is this going to affect things? Well, basically, and analysts haven't come out with this yet, but you can expect on Tuesday, we're probably going to start seeing analysts from all sorts of different companies adjusting their earnings for 2018 and what they're expecting out of companies, because in 2018, when this tax cut takes effect, there are a lot of companies that are going to shoot up earnings per share, definitely, because they're not going to be giving the tax man 10, 15, 20 extra percent. They're going to have that still in house. Now, we've heard a lot of people say that a tax cut isn't necessarily the best thing for the economy, right? The government, we're definitely in need of money. There's going to be obviously a lot of treasury bills sold out there that they're going to be trying to make back all of this money, but this money for these companies, I think, is going to be so effective. And I know there's a lot of Democrats and people against this tax reform that don't understand this, but you're going to get earnings per share increases, which ultimately is going to lead to more money in the coffers of these companies. Are they just going to sit on this money and do nothing? Of course not. You're going to see shareholders benefit from the price of the shares naturally going up, which we've seen today with a lot of the companies that are affected directly by this. And you're probably going to continue to see that, especially as analysts put higher price targets on a lot of these companies. Not only that, but you're going to see share buybacks probably increase. You're going to see dividends increase. You're going to see research and development with a lot of these companies increase. And most importantly, or equally as important as you shareholders out there getting what's due to you, is you're going to see employment probably increase, because these companies are going to have a lot more money to compete in the America as opposed to internationally, where a lot of companies, tech companies specifically, are not going to be getting this type of tax benefit. Because if you're doing most of your work outside of the United States, this tax benefit is not going to help you near the amount it's going to help companies that are employing people and doing business for the majority of their business inside the United States, tech is going to lag. There's no question about that. Now, we've heard people say that this is only going to be a redistribution of funds here in the marketplace as we see this, and not any type of a rally, because none of these companies are actually doing anything different. There's no really reason for the needle to be moving, but I kind of disagree. Again, I think a lot of these companies have been overtaxed. The government doesn't know what to do with your money. I mean, it doesn't matter what country you live in. Can you raise your hand and tell me that your government effectively uses your taxes in the proper way? I don't want a government having a whole bunch of money, not knowing what to do with it, running a deficit anyways, a significant deficit, when you could have companies that have built multi-billion-dollar conglomerates that employ tens of thousands of people over the entire country or internationally. I want them to have the money. They obviously have understood to get to the point where they're at, what to do when they have capital. A little bit more capital can help this economy flourish even further. So while the economy is doing really well already, I think this helps to sustain the growth in the economy personally. I mean, we're definitely going to have to see how it plays out, but I think corporate tax reform for companies in the United States is going to be a coup, and this is what Donald Trump wanted getting into office. He wanted companies that do most of their business in the United States, employing Americans, having the ability to continue to do that and grow and be competitive against other international companies. Definitely, America is going to become a much more economically and corporate competitive landscape, more so than it already is. And I, for one, think this tax reform bill could be an excellent move for the United States going forward, especially with the economy already doing so fantastically. Let's hope hiring picks up. Let's hope share buybacks pick up. Let's hope dividends increase. Let's hope all of this stuff happens, because ultimately that ends up benefiting you guys. And that's what we want, is we want you guys to reap the benefits of all this. They say the GDP might go up about 0.25% off this ultimately year over year. That's what the estimates are. So it's not really overtly significant when you talk about GDP and how much it's going to affect that. But I think when it trickles down to the common man, people looking for employment, people like yourself and I that are worried about the value of the shares that we own in companies, the dividends we get paid, that's where I think we're going to benefit. I want companies like AT&T, companies that do good work out there, industrial companies, whatever it happens to be, Alcoa, whoever ends up making the money, the companies that built themselves up into those positions to do really well, I want those companies to be the companies that have the ability with the capital to decide what to do with that capital, because ultimately the government doesn't create the kind of employment that private enterprise does. So I think that's going to be the best move for the government. Let's hope this tax reform bill gets passed in the final stage it needs to. And hopefully in 2018, we're going to see a lot higher earnings per share. So let's just give everybody a little bit of knowledge on that. So we are going to see EPS is going to pick up. It's going to pick up substantially for a lot of companies that are directly affected by this. Again, these companies aren't doing anything differently. We are going to see this in the news. When you're reading just those top line numbers, the EPS is going to go up, right? So you're going to see that. You're going to see analysts coming out probably starting tomorrow on Tuesday, changing their price targets for a lot of companies, changing what their estimates are for EPS. Let's just remember that this is changed because of this corporate tax rate. You still want to be out there picking best of breed. You don't want to be doing stuff exclusively because of a tax rate change, but that is going to be benefiting a lot of companies. So there is going to be somewhat of a shuffling of the deck. That's the main thing to remember. I'm Cody from Wall Street Breakdown. We thank you for stopping by. If you haven't already, click the subscribe button, click the notification bell, thumbs up for this video, all videos, thumbs up for corporate tax reform, and let's hope this works to the advantage that we're all hoping that it does, which adds employment and the trickle down to all of us. That's what we ultimately want. Comments, we want to hear from you. Let us know what you think about this tax reform bill, because I understand Democrats, Republicans, it's a very polarizing topic. People feel one way or the other. There's very few people that are sitting on the fence with this. I think I've already explained how I feel about this. Granted, I'm not an American. This doesn't affect me directly. It does affect some of my investments, but it doesn't affect me directly. It probably affects some of you out there. We'd love to hear what you think. Leave it in the comments section and have yourselves an excellent rest of your Monday.